Hi, welcome to my Utah 2025 housing and mortgage forecast. Today we're going to talk about kind of what's going to be happening in housing for the year. Mostly I'm focusing on northern Utah, that's where I'm based out of, and what we expect to see with mortgage interest rates. So the theme for 2025 is welcome to the new normal. Unfortunately, we're not expecting to see any real major changes one way or the other as far as rates go. We're going to see, and we expect to see, a steady increase in housing appreciation. This is more of a normal appreciation. If you were a homeowner during COVID, you win, but that is not normal. We do not want that. That was obviously unsustainable, and many people are unfortunately dealing with the affordability problems that caused when our house prices just went insane for those 2 years. So let's talk about rates. There are kind of three main factors that affect interest rates. So number one, just kind of the normal market fluctuations that happen throughout the day. Mortgage rates are based on mortgage bonds, and those get traded throughout the day just like a stock. So news impacting where people want to put their money will impact rates just like they will any other stock or bond. Inflation is a big factor in mortgage rates because mortgage rates are based on bonds. What that money is going to be worth in the future is a factor of whether rates are going up or down. And the third factor is jobs or unemployment. That's probably the number one factor right now. I think that will be, at least for the first half of 2025, probably the biggest impact on what will happen with rates and what the Fed thinks is going to happen with rates. Right now, the Fed feels like they have kind of reached their target inflation number. That's why if you paid attention to their meeting at the end of last year, they kind of changed their plan for 2025 where they're planning on, I believe it was 3 or 4 rate cuts. Now they're dropping that down to 1 or 2 rate cuts. So that shows that they believe that the economy is kind of leveling off in a place where they want it to be. They don't want to trigger inflation one way or the other. So the other factor that they monitor really closely is jobs and how much unemployment. Utah tends to have a lower unemployment than nationwide. I guess we're not a master economist for the entire United States, but we do have a stable job economy. We have a lot of government employees. We have a couple big colleges, so education is a big factor here. Construction is a big factor here. We have less manufacturing than probably we would like, but we do have a pretty good range of good, stable jobs. So we tend to do really well. We did really well during COVID. We didn't lose nearly as many jobs as many other places that have, say, more service industry. So right now we are seeing a slight uptick in unemployment nationwide. So these slides are from the University of Utah, their school of business that focus on economics and statistics. So these are all the latest and greatest slides from their department. So most recent number is nationwide is 4.2%. Like I said, Utah tends to trend a little bit lower in unemployment than the nationwide average. So currently, or the latest number from Utah is 3.3%. So what that means is we have, there's probably more jobs out there than we have people to fill them, which means incomes continue to increase. And then we become a migratory state where people come in from out of other states to get a job here. Like I was mentioning, we have a pretty good range of industries. In 2024, we saw a big increase in our construction, education, and government sectors. So those are all good paying jobs. Like I said, manufacturing probably did increase. I would assume our state economists would like to see a little more out of that category, but we have a good range of good steady paying jobs. So in general, we always have a good job economy in Utah, which is a big factor in housing. What most people are expecting is we will see rates decrease slightly throughout 2025. So if we're currently averaging 7%, then hopefully we get down into the average of 6%, which means we'll see some scenarios in 5% and, up to mid sixes, which would be, I think, a welcome. Any decrease would be a welcome decrease for potential buyers and current homeowners out there. One problem we are having, not necessarily just here in Utah, but nationwide, is what we're calling the lock-in effect. 70% of Utah homeowners have a rate of 4% or less. So if you want to move up or move down, it's really hard to justify that if you're going to go to a 7 or an 8% interest rate. Even though we have a lot of equity in our homes, it still impacts that payment quite a bit. If you're trying to downsize, that's a hard leap to make because you're paying more for a smaller house. So that has made it, that's not just to Utah. Existing a homeowner who refied during COVID took advantage of that, and to give that up is a tough pill to swallow, which I totally understand. So if we could get closer to a rate in the 5s for people, that's not as far of a leap. One thing to keep in mind, if you are not a current homeowner, NAR says for every 1% decrease in interest rate, 5 million more buyers are eligible to enter the market. Now that doesn't mean they do. So if they're priced out at a 7 or 6% interest rate, getting into the 5s opens up the potential for a payment that they could qualify. So as rates continue to decrease, if you're a first-time home buyer, you will see your competition increase. And even if you're a move-up buyer, you will see your competition increase. So keep that in mind. I've been saying for really the past 10 or 11 years to everybody is, if you want to buy your first home or even upgrade your dream home, whether that's the first or second home that you buy, it might be your third or fourth home that you buy, but you need to get your foot in the door and start leveraging that asset so that it can grow for you. And we're just going to continue to see house prices increase. Not a whole lot of news on rates. Jobs is going to be the big factor, like I said, at least for the first half of the year. Then after that, rates will always change. That is the one thing that will always happen. What are we going to see happen with housing? In general, Utah post 2008 has had a housing shortage that we haven't caught up from. After 2008 hit, and Utah was not the only state affected by this, but we did not build homes for several years, not the amount of homes that we needed to build. A lot of builders went out of business during that time, and we just didn't build. So you couple that with our increased population growth, and we have had a housing shortage for a long time. So our current housing shortage for the year, based on 2024 numbers, is 35,000 houses short. We're kind of in an interesting position because we aren't having a ton of home sales or a normal amount of home sales because of rates being higher. Rates will definitely impact short-term demand, so that year to 2 year range. As soon as rates come down, like I said, we'll see a bunch more buyers enter into the market. So if we're building houses, there's the balance of that for builders to build what they can sell, but are we building enough as a state to accommodate our growth? So we do expect to see house prices continue to increase slightly, but not what we were seeing during COVID. It's much more normalized. The unfortunate thing that has happened, we are now in the top 10 of the highest priced median homes in the whole United States. This is not a company that we like to keep, but unfortunately I don't think that we're going to come down from this unless some other state has some crazy economic boom. We're still short on how many houses we have in general, so I don't see how that is going to really come down unless some other state outpaces us. Big factor of that is Utah tends to have higher family sizes. Now our birth rates are decreasing slightly, but we have recently switched from our overall population is continually growing. That has switched from our own internal growth through our families to now we are kind of more of a migratory state post-COVID. We've had a lot of influx of people from other states. Our population currently is just under 3.5 million. The projection is, I believe, to get to 4 million in the next 10 years. So that poses the biggest problem that we're going to run into in Utah is how can we build affordable homes? How can we build starter homes that first-time home buyers can buy and support our population growth? So if you see this chart, you could see the red dotted line. You can see our natural birth rates have been trending down, but our migration, the gray boxes, has outpaced that. That hasn't really ever been the case, but that has changed since COVID. Now, so on this slide, that I thought this was interesting. You can just kind of see the median sales prices for all these little counties in the whole United States. Really, the coastal states and the Mountain West states are the highest priced. But I do want to remind everybody, if you go back to elementary school, if you remember mean, median, and mode, the median price is just the midpoint of all our sales data. So it's not the average. The average sales price tends to be lower than that because more people can afford a lower price point, but median is the data that is the most easily tracked. So these are not the average prices. It is the median price. How much money do you need to make in order to afford the median price in each county? Summit County obviously is our Park City. That's the most. You need to make $369,000. Weber County, Cache County, you need to make $125,000 as a household. Unfortunately, that's not really helping our renters. At the median household price currently, statewide, that's $510. It's lower and depending on the county that you're looking at, but 92% of renters cannot afford that. And even if our price dropped down, our median price dropped down to $350, that would only add another 10% of renters that could afford that price. I don't mean to say that to be a downer. It is what it is. The numbers are what they are. If you are in that category and you cannot afford the $510,000 house, then you need to buy the house that you can afford. And like I said, that might not be your dream home, but that needs to be your starter home, and that you need to buy what you can afford, and you need to buy as soon as possible. Based on all of this data, unless something super crazy happens that's unforeseen, we just can't build enough houses to offset the affordability issue fast enough. And the challenge that builders have is, even if they wanted to build a $300,000 house, it's just not practical. By the time you account for all the costs just to start the home, the land is more expensive, the permits are more expensive, the utilities are more expensive. The cost of everything has gotten to a point where the baseline for a builder too high. Maybe that means buy a condo to start with or a townhome to start with, and then upgrade into a single family detached home later, or you're going to buy a smaller, older home. All I can say is get into what you can get into, even if that means you have to buy with family or, a couple friends go into it together, just so you can start building some equity. Most people really just can't save enough to offset the price of the house enough where it makes much of a difference. You've got to leverage that asset. My goal as a loan officer is to help you get into what you can realistically qualify for, what you can realistically afford, and start building equity. the average homeowner has a net worth that's significantly higher than renters. NAR reported that the median net worth of a homeowner is $400,000, while the net worth of a renter is only $10,400. The reason for that is obviously if you were a homeowner pre-COVID, you gained a ton of equity during that time. But you're also putting yourself into kind of a forced savings plan where you're paying down the balance of your loan every single month. That equity continues to build, plus just the average, just the home appreciation. On a higher asset, that percentage is higher, versus when you're renting, it's all about what you can save, and it's hard to save tens of thousands of dollars every year. This is the tool that most Americans use to build their net worth. There are always opportunities in any market. I'm recording this on January 15th, 2025. Wintertime, which is always a little bit of a slower market in Utah due to the weather. Kids are in school, so there's a ton of opportunity now, while the demand is just generally slower. Demand is slower because rates are a little bit higher, but as soon as that changes, we will see more buyers come into the market. I'm always here to help you. I will put my website in the show notes. If you need help with your mortgage, please reach out. I'm licensed in Utah and Idaho, and let's put your plan together for you. Whether you buy this year or next year, do whatever you can to buy that home. If that's the goal for you, you want to buy your own home, then now's the time to do it. I'm happy to help you get your plan put together.